Eric Muathe, Muathe.com. In today's study video, let's take a look at NVIDIA, which for the day is down about 6%. We try and see whether we can see whether there was anything over the last couple of days that indicated potential for resistance around here before today's drop. This being a 6 months daily chart. So the question here is, was there anything on the chart that gave a warning signal here? And let's say the RSI there. Anything on the charts that was giving us a warning signal is what we're going to be taking a look at. Oh, by the way, before I forget, in the description of this video, I'm going to have a link to my video where I was analyzing this stock here in about the 117 price range. And I was explaining to my subscribers why I thought this was going to be a major top. So check the description of the video for that link. Here's the video. So just look for it in the description. And again, the stock price at the time was at 117, where it looked like there was something in the chart that was developing after a nice run that the stock was due for some major pullback. But let's be honest with each other, stock market can be rough. So that was potentially a lucky call. You be the judge. But for the purpose of this study video, let's take a look at this price level here in the 109, 110 price range. Was there anything on the charts that was giving us potential for resistance? I'll give you a couple of lines. In fact, 3 lines altogether. Check the highs on the daily RSI, connect them. And you can see that somewhere around here, we were coming close to that resistance. So that's one line that was giving a warning signal. The top side, RSI resistance line. There is another line which I call the Uniformity resistance line. Check the description for an explanation of this method. But this was the break here that brought the stock off the highs there, intraday highs. We take that information and draw a line, something like that. And you can see again, we've hit that line twice with uniform action rejection on the line there for the break. And here we can see came close here at about 110, 109 highs. So that was another layer of resistance. That's line number 2. Keep in mind that line so happens to be at about RSI level of 61.8. In fact, if we backtest the same line by going backwards, something like that, we can see the line corresponds with a previous break, which was a warning high break. This high was a warning break here. And finally, we break below that line of the highs. Recently, resistance here at the highs there. And again, resistance here for the highs there. So there's your 2 lines. I promised you 3 lines. So I'm going to take all these lines off so we don't get confused. And in my opinion, there's another line. It is a simple line. This line is, just draw this line like this. And what this line does, it gives you the failure point here, which is this movement. Since then, this line has been a problem. Resistance here with uniform action for the highs there. Resistance here with uniform action for the daily highs there. And again, resistance here over the last couple of days for this daily high. So there's line number 3. Keep in mind, this is 6 months daily. 6 months daily. So the question might be, where does this red line come from? Well, let me show you. Let's take a look at a 1 year. So now we have a 1 year daily. I'm going to draw the same line. Should be something like that. The line was support during the good days. And this line has turned into resistance since then. As you can see, resistance with the break. Resistance there. But you might ask, but where does this line come from? Well, let me show you one more chart. This is 18 months daily. And this line goes back to the lows of early 2016, January, February timeframe. and I'll just draw the line like this. It's a simple line, but is very relevant in the current market. You can see recently we tried to move above that line, but obviously we were rejected here, and as a consequence of that, we see now that the stock is pointing down. So that's the third line, and if I can just bring back the prior two lines so we can conclude this. We got top side resistance, gave us the recent resistance zone here, and we have the uniformity resistance line somewhere there, which gave us another layer of resistance. And as you can see, those three lines converged at the highs right there, and since then we are seeing the stock pull back. So that's what I would call the reason why the stock is pulling back lately. But again, if you want to understand why the stock is off the highs, take a look at this video here going back to February 9th 2017. Eric Muathe, Muathe.com. As always, good luck, peace and blessings. I am